Well, a sharp increase in fuel and other costs have weighed on Clover's interim results. While the group reported an 11% rise in revenue to 3.9 billion rand, it was insufficient to compensate for those rising costs. As a result, headline earnings per share fell 33.5% to 40.7 cents. And joining us now live in studio to unpack the results further is Johann Vorster. He's CEO of Clover. Johann, thanks so much for joining us today.
Thank you.
Well, I've gone through the headline numbers there, and as I was chatting to Mohammed earlier on, I said to him, you know, revenue up 10.8%, but the company really struggling to see this translate to the bottom line.
Yes, it is a bit of mixed results for us, because internally we're very excited about what we've achieved in the last 6 months. We've launched 4 new products and platforms. And of course there was an associated marketing spend investment with that. And you can't market something if you don't reduce the prices as well. So that is where most of that costs have gone to. So we can't really blame only a soft market on our results. Our results have been because of extraordinary expenses that we've had. So it's very difficult to recover all of that in a very short period of time. And we had to do it because with Cielo Blue, the project that we've implemented successfully so far, we've shown that we can handle these big capital projects of that magnitude, and with that came the new introduction of the platform. So it all came in one period, and it's machines that we've ordered some 3 to 2 years ago. So yeah, that was we're unfortunate on the profit side, but we're very excited about what we've achieved.
It's that new production technology that's allowing you now to differentiate your brands out there in the market. It has seen you experience some teething problems though, so talk us through some of the lessons learned and how you're looking to turn things around moving forward.
Yes, we've had some teething problems, specifically on our Prisma pack, with the move of the machines and the introduction of the new platforms. That's all been addressed now, and any supply chain issues have been solved. The only part of Cielo Blue that's still remaining is the move of the Mayfair factory to the Clover facility, but all the coastal areas have been done, and done successfully. So from now on it's focusing on the last leg of that, and then recovering the costs in the market. But I must add, we've gained market share in almost all the categories that we've entered into, and I think the new packaging and new platforms are working for us.
Yeah.
It's a question now of getting that price increases through. We have put through all the price increases. It's been accepted by all the major groups. Now we'll have to see how the volumes hold up against that, because historically we've seen that the volumes do go down for a first while and then go up again.
Because of course you've highlighted as well that you've seen aggressive price promotions come through and or play out during the period, and many question just how sustainable a strategy that is, given the kind of cost pressures you're having to contend with as well. So take us through what kind of targets are being set in terms of return on investment when you're anticipating to hit those targets.
Our minimum internal hurdle rate is 21% on all new projects, of which we have still many in the pipeline. We certainly will not stop our capital investment program. We've got full support by the board and our major investors to carry on with that. But with any of these new launches, there are associated costs with that. So it'll be less in the second 6 months than what it was in the first 6 months, but there will still be new platforms that will be launching in this next 6 months, for the very reasons that I've mentioned. The machines have been ordered 18 months ago, and you've got to do that. So it's a combination of getting the price points right, make sure that your premiums are not too high, and curtail the costs.
Let's look at curtailing the cost, because you've got a regular distribution to over 14,000 delivery points and more than 600 trucks who deliver on average to 8 customers per day, per truck. So what are you looking at to mitigate against some of these costs moving forward? Because a lot of mention was made of the redesign of your supply chain, and that needing to happen for you to get a proper handle on the cost side of things.
Yes, as I said, it's not yet 100% completed, so that'll be one effort of ours. The second would be that we've introduced Red Bull and Epic already into our business, which will help sharing those costs. And we're very proud to announce that the enterprise business is joining us from Tiger the 1st of June. So if you can bring in more income into the cost base, then it can be shared amongst people more equally. And that's one of the strategies that we have.
Okay, let's take a look at the environment you're operating in right now, the consumer that you're targeting. To what extent is that forcing you to shift the kind of product you're putting out there and bring to the fore the kind of innovations we've seen over this period?
Yes, if you look at our beverages business has grown 18%. The milk business has grown 4%. Milk is very important for us because it's the carrier of all the other costs and the products to get to the stores. So we are growing in the right areas, the beverages, which is the higher value-added products. But it's a combination of that and redesigning the distribution network so that you can optimally get to the customers and the consumers ultimately what you want to do.
Yeah. Africa strategy moving forward, where's that headed?
Yes, we've made some interesting headwinds there, progress there. We've identified that we need a production facility. I'm talking specifically about Nigeria, and we're also looking at Angola. You can't really launch good products if you don't have the production facility. So we're well in advance in identifying premises to do a greenfield in Nigeria. And in Angola, we'll probably partner up with somebody. So those are the two main markets that we are concentrating on.